Welcome to the outlook for August. This is where I take a high time frame view of the markets, looking at the charts, looking at catalysts and risks. So today's title for this month's outlook is seasonality. Now you have all seen me share this schematic with you. This is the price action of every Bitcoin summer since 2020. And the point is to show that in summer, you expect chop. That's what I've been telling you guys. You don't have the same bullish backdrop that you get in Q4 and Q1. That's where you get tax season, which can lead to reflexive buying or even reflexive selling if we're in a bear market. And it's those periods which allow price to have those breakaway markup rallies. It's just generally not the summer periods which allow for that. So you have this horizontal line. This is where price begins in June. And as you can see, summer tends to finish somewhere around that same price, whether it's higher or lower. So where does that leave us here? Well, you got your beautiful summer dip, which was an absolute buy, as I mentioned. That should be the low from here. I don't see Bitcoin going below that level and remaining bullish because that would trap all of these buyers above the recent breakout, and that would invalidate the bullish weekly market structure which we have going on here. So instead, I would just expect what we're seeing now, what we see every summer, and that is chop, because these breakaway rallies, look, we have 1, 2, 3 weeks of uninterrupted upside, but that's because it's in October, November, in that more bullish period where you have your markups. Again, we go to here, you get October 2023, uninterrupted upside. February 2024, uninterrupted upside. And that's because it's Q4, Q1. That's when Bitcoin tends to make its big markup moves. And even back in 2023, January, that's where you get your markup move, which doesn't get filled in. And even March here, 2023, so end of Q1, you get that markup, which doesn't fill in. So it's the summer. That tends to be choppy. And that's exactly what we're seeing here. Just a little bit of chop, a little bit of pullback, but overall, perfectly fine as long as we don't make a new low this summer and finish anywhere, ideally above this June 1st level of 105k. That would be perfectly on track for a bullish September, October onwards, where we can make some new cycle highs. So let's dive into Bitcoin first of all. High time frame. That's seasonality, that's summer, but how did the month close out? So we actually made a new all-time high on the monthly close basis for July. Now it's a decent monthly candle. Obviously we do have quite a big upper wick there. So the wick to body ratio is like 50-50, which is a small sign of momentum getting exhausted here. And that doesn't necessarily mean the top is in, as you can see, 2021. You get these huge wicks, which, yes, means we're late stage in this rally, but price actually 2x from 33 to 65 at its peak after that candle, which showed signs of momentum exhaustion. So it doesn't mean we can't go much higher. It simply means that, okay, this rally is getting later and later stage. And that's no surprise because, look, we have been rallying on the monthly chart uninterrupted since January 2023. So really, it's no surprise that we're getting into those later stages and you're seeing some of these breakouts start to get a little weaker and weaker. And that leads me to think that August will likely be a sideways month. And that's perfectly fine if you can build a base where this month we don't go below July's low and we don't go above July's high. That sets up and builds energy for either the breakout or breakdown of July's candle. It sets up an inside month, and that's fully what I expect in August. It's going to be choppy, I think. Don't think we see a breakout or breakdown outside of July's candle, but that squeeze, that crush in volatility is what allows for the next big move in September onwards. So that's what I'm seeing here. You've seen this pattern over and over again. It's just cause and effect on Bitcoin. You have your box or your consolidation, and we've really only broken out of it in July. And we're above it right now. So that's why I say any consolidation in August is perfectly fine as long as we don't take the low of July. We can sweep it, but ideally you want to leave that liquidity for much later on when we actually enter a bear market, because that would show breakout continuation. Since we have consolidated for long enough for this move to really mark up to new highs and have multi candles breaking out. That's what you want to see after a lengthy accumulation. Otherwise, it sets up a trap for bulls. So you want to see price accept above there, and that's good. And you see this over and over again. As I said, another box here. What happens? Well, we mark up, we never return, we retest it briefly in April. So again, retests are fine. We can come all the way down to 110 and that would be perfectly normal, whether it's in August, whether it's later on. That dip is a buy. I do still think we are in a bull market, and I do still think we're going to make new highs. It's just a matter of when. And time again, you see this. What do we have here? Again, that summer period, box breakout, and we mark up. Here we don't even retest it. Now, of course, it works on the flip side, so you can't just assume everything's going to be a breakout. In this consolidation example, the distribution actually won and we broke down. So the cause and effect here, those smart money players that were distributing were the ones that won. Those that were accumulating, they lost, and that leads to your downtrend. So good to see we've broken to the upside. Now we want to see it hold and not form some sort of trap. Because you'll remember in last month's Outlook, I shared this with you. It's one of my favorite setups and it played out so far beautifully. It's where you have a box consolidation and price then consolidates in the top right corner of that box, which means that price is accepting at the upper end of the range. It means that volatility is squeezing, and that often leads to breakouts. It's a very bullish sign, and that's exactly what we got in July. Got that breakout of this beautiful setup here, and now we're just simply back testing it, and that's perfectly normal. That's why we're seeing a bounce here. You'd expect traders to bid the all-time high retest after a breakout. It's just yet to be seen whether that leads to new highs or if we still need to chop, perhaps bleed lower. So that's what we're going to be diving into. But right here, beautiful setup. I mean, that's since November to July. So over half a year of consolidation, breaking out. It really should lead to a decent trend here on Bitcoin, and good to see lots of traders getting super bearish as we just retest the all-time high. As I always say, some of the best setups you see in the market is when an obvious level like the all-time high, like 112k, when it gets retested, it's met with bearishness, it's met with FUD, it's met with panic. Those are the best buys. Whenever an obvious support zone is met with complacency and bullishness, that's actually a bad sign, and you're more likely to break through it. So far so good. Of course, that is because alts have nuked much harder, which we'll dive into later, but so far seeing the signs that I would want to see, and it is simply just a retest of this upper consolidation. So zooming into Bitcoin here, go to something like the daily chart. What have we seen? Well, we had an uninterrupted rally from this 74k bottom to 123k. Now, you all know I was buying 75.2, playing this beautiful rally where I TP'd a lot of it around 108. And it was really just absolute easy mode. Let's just take all of this left side of the chart out and look at it for what it is. You've had uninterrupted upside since this tariff panic. You have a gap here, doesn't get tested at all. And the reason this gap doesn't get tested is because this is your disbelief rally. Traders are still shorting here, de-risking. They're not bullish when we had this small mark up. Now, when you have the next gap up, this is where your trend followers are now on board. This is when people are now getting more confident. There's more belief in the rally. And that's why this gap fills, something I dived into in previous monthly outlooks. So it's no surprise that this recent gap, this is the one where you do have, some small signs of euphoria. You do have hope. You do have way more belief. No surprise to see this gap getting filled. And whether it fills all the way to 108 or whether you like to take your gaps as an FVG, I know some people do, it doesn't really matter. The point is, this gap was likely to fill in. And I mentioned this as soon as, you saw price coming to fill in that 114 to 116 gap again. So it was this impulse candle here. An impulse candle is a candle with high volume that has a big open to close difference. I mentioned that, dipping into it here was bullish. I got long. Even the retest with a higher low was bullish. I added to my long. But as soon as you then saw price coming back down into it the next day, well, there's no free ride in the markets. All of a sudden, I know my entry wasn't good anymore because everyone's getting a free ticket on my entry. So it became very obvious to me that, look, we're going to fill in all the way to 112K. And I've been saying this for weeks. That's exactly what we got. It's this previous all-time high retest. Mark that in black. I'll mark that as 112K. I'm going to set out some key levels for you guys because it's very clear, very obvious, these levels that are playing out here. We now have a bunch of trap buyers in this range here. So what I'm looking at, a trigger to get bullish again, is this volume profile from the high to the candle before we broke down. That is where everyone is now trapped. And we can go on something like the 4-hour chart briefly. Let's take these off for a second, just so we can get a more accurate look at this volume profile. So from the high to the candle before the breakdown, let's see where all of the buying and selling was done in this range, because this is now confirmed a distribution. The sellers won and the buyers are all underwater. So create some pretty key levels where you have a value area low here at 116.7. I want to see that reclaimed at a minimum. You have a POC here and you have the value area high. Now, the POC and the value area high are less important. It's more about me seeing price accept back in this value area, because that puts those that were accumulating back on side. It means that they're not selling at break even. They're not de-risking as soon as they get a chance. And that shows acceptance. That shows that this could potentially then simply just be a trap if we can start accepting above this level here. Now, I would expect it to be resistance initially, but if we can climb up, start accepting above it, get above 120K, then I think that is the path to trade in the most bullish scenario here. So we'll mark that in green. Now, 120K is the most important level for me. This value area low reclaim would be bullish, but it wouldn't be my ultimate confirmation. It would be an early trigger. And what we can do is we can mark this out in a dotted line to clearly differentiate it. So reclaiming 116.7, that's my early trigger to say, maybe it's going to be bullish here, but initially you expect it to be resistance until flipped. But once we can flip 120, well, now everyone's in profit, and that can lead to reflexive buying, where I'd expect Bitcoin to mark up and go on its next leg. So that's what I'm looking for there. And this 120K level is simple because previously it was 110. That was the level to flip for Bitcoin. So let's mark this out. 110K, 120K. Previously, let's look to the daily now. We tried to get above it once. We tried to get above twice, even 3 times in here, 4 times, but 110 wouldn't flip. Then eventually it did, and that leads to the markup. Now we'll remove this for now. You guys know the key level is 116.7, that volume profile. Let's remove this path. What did we see? Well, 120 has now become the new level, which is rejecting. Once, twice, 3 times, 4 times, and you can even say this was a 5th time here. So that is clearly the level to flip for Bitcoin to become bullish. That is now my trigger to look for new cycle highs and trade some of that trend momentum. The value area low reclaim, again, that is my early trigger. So what we're looking at here is Bitcoin and its daily bands have been disrespected. So I'll remove these arrows for now. Because what can we expect in the coming weeks? We know our key levels for bullish momentum, but what can we see on the downside even? So last time we lost the daily bands was here. Before they were respected, leads to new highs. Again, respected, leads to new highs. But then we close below them, and from there, you get consolidation. Very simple. So now that we have closed below them again, what am I expecting? Well, I'm expecting consolidation. Now, how can this consolidation look? Many different ways. You can have sideways consolidations, you can have upwards consolidations, you can have downwards consolidations. Since August is expected to be a choppy month, I think we could see something where, again, bullish path, we go up from here, maybe find some resistance, but build a base, strongly mark up above 120, and we go. That's your green path, that's your most bullish path. But that's not necessarily going to happen. We could also form a lower high here, whether it's anywhere in this kind of zone from that sell-off. That would mean the buyers are licking their wounds and exiting at break even when they get the chance. And that could lead to a potential chop further where we either retest 112 and go back up or continue down to some lower levels before we reaccumulate and go up in September onwards. That's another idea which I'm looking at. And for me, it's very simple. Look at something like the weekly bands. So let's take these drawings off. Once your daily bands are no longer respected, what do? Well, you simply look to your high time frame bands. So on June the 22nd, we knew back in May that Bitcoin wasn't respecting the 12 and 21 EMA bands on the daily. So you need to find some slower trend support. Your fast trend support is no longer being respected and leading to new highs. So you flick to something like the weekly. What happened? Well, that became your new trend support on that June 22nd dip. So that's what you want to see here again for Bitcoin. Anywhere in this zone, at the moment it's at 105K. This will rise as the weeks go on to 112K, which we've already hit. That would be a fine lower, sorry, higher low for Bitcoin and keep the weekly market structure perfectly intact. Remember, the weekly market structure is actually all the way down here at 100K. Now, of course, I don't want to see price go down here. I think we should respect these weekly bands going up. Therefore, that becomes your area of interest. We could dip to 110, we could dip towards 107, but anywhere in this blue box holding those weekly 12 and 21 bands would be perfectly fine and offer a nice pullback on Bitcoin. Still keeping everything bullish. It's just a breakout and retest. It's only once you set a low and then actually start to break below that low, and this would be your bearish path. So you're losing your structure. You're breaking this low and you're going into lower lows and lower highs, which denotes a downtrend. Well, that's when you can exit on that close below as price is changing its structure, and that's where you de-risk. But at the moment, expecting this green path, seeing a nice bounce here early into August. And the area for me to de-risk is over here, because this is the moment where price could equally continue on further in the short-term bullish path or form a lower high and lead to the orange path. So that's the zone for high risk to reward to de-risk my spot bags, take some profit on those. That's what I'll be doing anywhere in this area. We'll keep you guys updated. And then after that, the next area, the logical area to de-risk, again, it becomes at this level when we invalidate this orange path and make a new low. So keep an eye on your market structure. That's the most simple way to play it. But I would say the orange path, something like that, is probably going to be the most likely. I don't think we just break out in August. Potentially it leaves people sidelined, but I also think it's too easy, and it would be quite a nice ride if we do just go up only from here. So not sure if there has been quite enough pain or if we do need to see more chop, whether that goes to simply just 112 getting swept again or 110 or lower. I'm not sure, but that then leads to your breakout in September and onwards, which are typically your more bullish paths. So that's what I'm looking for with Bitcoin. That's the play. Using that value area low as my intra-week resistance as I'm trading throughout August. So that is everything BTC. Let's take a look at Ethereum. So the monthly close on Ethereum, very strong. We've had these strong monthly closes before, here in November, here in February, and back here in October. They generally lead to higher, even if the month finishes red. So potentially could see that continue. Ethereum take off again in August. Wouldn't be surprising at all. It tends to do that, but you do generally expect consolidation after any of these big months. You can see here consolidation. You can see here leads to consolidation. And that's kind of my base case of what I'd expect next. So looking at some levels here, again, if it follows the green path like Bitcoin, then this is what I would expect for ETH, some sideways consolidation before a breakout, building that cause and effect. Again, it's just building these boxes. As we see so often in the markets, it's cause and effect every time. And the breakout of the box decides whether the accumulation or the distribution wins. Of course, sometimes you get traps like we did here, but as soon as you reclaim, well, that's your signal that, okay, this in fact was a trap. So therefore, the green path is the non-trappy path. That is just sideways consolidation and breakout. The orange path is the more choppy and trappy path, where if Bitcoin has its respective orange path, sweeps 112 or heads towards 110, then you could see Ethereum lose this yearly open level. That's the key level here. So looking for Ethereum to hold that 3,335 yearly open level, then you expect a green path. But if we lose it, then probably going to chop towards 3K and potentially even this support resistance flip. So that can go anywhere in this zone. but that would lead to bullish price action as we head into September, October, and there's more bullish months. I think the overall target is clearly 4.1k, that cycle high for ETH. When you leave liquidity, it tends to be very bullish. If I'd actually had seen Ethereum take these highs, I'd be more inclined to think, okay, well, the target's been hit. There's less reason to bid Ethereum. But since you've left the target, there's reasons for players to continue bidding because that is where the liquidity is going to be resting. There's going to be lots of stop losses there. So price is incentivized to go there. And I actually think we probably can mark up to all-time high, and that is the eventual target in this rally for ETH. Because you're starting to see institutional adoption. You're seeing Wall Street bid Ethereum way more for weeks and weeks now, something we've never seen than Bitcoin. You're seeing Ethereum have higher volume for weeks and weeks than Bitcoin. You're really seeing this trend shift towards, okay, we're running back the 2021 game where Bitcoin profits are rotating into ETH. And on the lower time frames, you're seeing it rotate into Solana after Ethereum. And then the pullback follows. So expecting more of the same. ETH seems to be where the strength is at. Obviously, we closed below these daily bands, showing some disrespect. So can remove these paths for a second. We could see, these 12 and 21 weekly bands become the next trend support for ETH and would be a great dip buy as long as that cycle high at 4.1k hasn't been hit, because that creates the target. So that's what I'm looking at when it comes to Ethereum. Quick check of ETH BTC. So again, you're seeing that trend where the 12 and 21 weekly bands have finally flipped bullish after years and years of them being bearish. So simple trigger, while everyone's stupidly getting super bullish ETH on every single little bounce in the downtrend and getting absolutely wrecked all cycle, you could have just waited for these bands to flip bullish. Some sort of technical trigger. And now you have that. Now there is a genuine change of character where you're seeing something different. And that can lead to higher targets on this ETH Bitcoin ratio, where we see Ethereum relatively stronger than Bitcoin for the rest of the cycle. And you can hit any of these bands, let's say the 100 or 200 week EMAs, they could become a target, and that still sets up for, a really nice move even from here, 24% or 44% of outperformance in ETH to Bitcoin. Therefore, any dips into these weekly bands, well, that's going to be when you can pick up your cheap Ethereum relative to BTC. So watch out for that. Watch out for these bands to hold as support. Of course, you don't trade this chart. It is a relative strength chart, so it doesn't mean ETH in dollar terms is going up or down. It means ETH is relatively stronger than Bitcoin, either through upside or through downside. So that is everything for ETH. Now looking at the wider markets, so the risk on markets, we look at stocks. So this is the S&P 500. What are we seeing? So we have had an uninterrupted rally since the tariff sell-off. It's been up only. We've not fully retraced any green candle on the weekly until now, until this week. So it wasn't a crypto-related dump. It was actually a market-wide risk-on asset dump. And that was off the back of FOMC. So Powell was quite hawkish in his speech. That led to some pullbacks in those risk on markets as traders are pricing in, well, at the time they were pricing in a much lower chance of a rate cut. That has now 180'd again. So we're seeing a lot of chop. There's a lot of indecision, and that leads to one of these three paths for me. So green path again, if risk on assets can just simply retest around their previous all-time high level, like this green path, then that sets up for short-term bullishness. If we need to set more of a trap, like the orange path, so trap some bears over here who will be calling for much lower, crawling out their caves. Well, that's going to set up the orange path and will lead to the respective orange path on Bitcoin and Ethereum, where you get those deeper pullbacks, deeper bleeds throughout August, and we actually mark up later on in September, October. Or, of course, if it is going to be bearish, then you'll see that new low be made, start getting that lower low and lower high structure, and probably consolidate throughout the rest of 2025. It's pretty simple for the view with stocks. As I said, we have this beautiful rally. Pullbacks are normal. Bitcoin went from 74 to 123. The S&P went from 4.8 to 6.4. This is trillions of dollars, guys. Trillions of wealth. Very normal, especially during the summer, to just see a normal pullback and even a retest of the previous all-time high, because there's going to be bidders there. There's known liquidity there. So price tends to move towards liquidity because the aim of markets is to match a buyer and a seller. That's it. It's that simple. That's why markets move to where they move. So looking at the risk off markets, so stocks, that's your risk on markets. That's going to have your biggest correlation to altcoins, especially. Whereas something like gold is a bit more risk off, so it rises in turn to geopolitical conflicts. Overall, all of these assets go up and to the right because they're a hedge against fiat debasement. They're a hedge against the monetary system. So they do travel up and to the right on the high time frame, but they just move in different turns. And you see that with the gold and Bitcoin correlation. So as you can see here, gold marked up from February to April, and the exact day that it broke out of this consolidation, well, that led to the top on Bitcoin. Bitcoin then started consolidating while gold marked up. And then once gold topped out in that rally in October, exactly after that week, Bitcoin then went on its rally as gold went sideways. Then again, gold broke out, Bitcoin topped, you get the markup on gold, and that chop and consolidation on Bitcoin. Then finally, we've seen this recent consolidation on gold, and that leads to the markup on Bitcoin. They're inversely correlated in the short term, but in the long term, the profits from gold, they tend to trickle down into Bitcoin. You're seeing Bitcoin's dynamics change, especially recently as it starts to develop more risk off flows. It has a little bit more strength in those risk off environments like gold does. It still gets dragged down as it's a risk on asset in the short term. It's correlated to the stock market in the short term, but it shows that relative strength on those risk off pullbacks. So eventually, once gold is finished running, like when it topped out here, that's exactly when Bitcoin then takes over, and you get that wealth effect from gold into BTC. So really, when it comes to gold, what am I looking at here? Well, we've got an all-time high at 3.5K. It's holding these weekly 12 and 21 bands very nicely. So if we can push to that all-time high and break out, that's going to lead to chop and consolidation on Bitcoin, probably that orange path and risk off in the stock market in altcoins as we chop and bleed more so in August. But eventually, that markup, if we do break out and hold, when it consolidates, that will then lead to even more wealth, even more profits to trickle down into Bitcoin, and will make me very confident that we are going to make a new cycle high on BTC. Because it's just how markets work. All assets are simply a liquidity pool. Money is flowing and rotating from one asset to the next, to the next, to the next. It's just one big game of musical chairs as liquidity switches into each asset. And you want to be the one first in and not the last out. That's how you win those rotation games. So gold, if it breaks out higher, that's going to be short-term bearish for Bitcoin, but long-term bullish. Expect new cycle highs. Now, if gold fails at this all-time high and sweeps and falls back inside and even loses these 12 and 21 weekly bands, which it hasn't done in years now, well, that probably sets up your short-term bullish move on Bitcoin. as you see this pullback and continue its consolidation. But to be honest, I'd much rather see it mark up so we can have an actual bigger wealth effect. And I think that's what allows for 140k Bitcoin, 150k Bitcoin this cycle. You just have more profits to flow around. So watch gold, watch to see if it breaks this all-time high, if it can even reach it, or if it breaks down from the weekly 12 and 21 bands. That would be short-term bullish for Bitcoin, but probably getting towards those later ends if it can't actually mark up and build that extra wealth effect. So that's what I'm seeing when it comes to risk on and risk off markets. Of course, we got the dollar, so this is another risk off market. Investors flee into the dollar when they want to be cautious, because that means they're not buying assets, they're actually holding fiat. So when you hold fiat, which gets debased, well, that's a real sign that, okay, it's probably bearish Bitcoin, bearish stocks. But the good thing on the dollar, obviously since Trump's inauguration, that red arrow there, it's been down only. But we knew that was going to happen because Trump's last inauguration in 2016, 2017, when he came in his first term, dollar went down only. That is generally how he likes to run his policies. So overall, it's a high time frame bearish chart, which is bullish for stocks, bullish for Bitcoin. Trump likes a strong stock market. You've seen he's all about Bitcoin, supposedly this term, so that would be a strong Bitcoin. And you've broken down from a huge range here on the dollar. So all of this is confirmed as now distribution underwater. So high time frame, you expect this chart to downtrend. It's just whether it's going to downtrend in the short term from here. So look at these lower time frames. Get our bands back on. They are starting to turn bullish, these bands. So we could have a bounce higher. It'd be perfectly normal in a downtrend to have bounces. Or we could immediately go down. And it's all about this low here. And when we break it to set up the next risk on rally. And overall, as I said, high time frame, the direction is down on the dollar, which is bullish risk assets, bullish Bitcoin, bullish crypto. But if you get caught up in this bounce, well, that's going to lead to short-term pullbacks and chop in those risk assets. So something to keep an eye on. That is the risk on and risk off markets. So taking a look at Bitcoin dominance and your altcoins. So I mentioned during this down only period, this is not the time to get bullish altcoins over here or even over here, because that is when everyone's piling in. Everyone's seeing the same chart. They're seeing this breakdown, and it's very simple. During a downtrend, you want to get short on the bounces, not at the absolute bottom, right? You want to sell the highs, not sell the lows. And it's exactly the same when it comes to this chart. Obviously, this is Bitcoin dominance, so when this chart goes down, it's bullish for altcoins, but that means you don't get bullish altcoins at the lows. You don't get bullish altcoins after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days of uninterrupted downside. Instead, you wait for the consolidation, which I mentioned to look out for. We're getting that here. And it's really a matter of, do we go higher? Now, this tends to be driven by a Bitcoin pullback when you see Bitcoin dominance actually rise. Or do we see immediate continuation lower? And that will be confirmed by making a new low over here. And that would be immediately bullish for altcoins. That tends to happen when the market rises. And very simple. You have this weekly trend on Bitcoin dominance where the 50-week EMA has produced new highs. So it's yet to be seen. Will this 50-week EMA produce a new high? Or if we make a new low, as per those blue or orange paths, now we're really seeing alt season. We're seeing something different. It's a change of character, and you really want to be very bullish on altcoins there, as it looks the most likely they will ever look to have a run, since it's bucking the usual trend. So that's it when it comes to Bitcoin dominance. If we look at the total altcoin market, so excluding Bitcoin and Ethereum, what are we seeing here? Well, we built a nice base over here, something I've been mentioning. this consolidation is nice. We had a markup which has failed recently, but if we can just form a higher low above this 50-week EMA here, so that is the 50-week, this purple line, well, that's still going to be bullish because you're making higher low after higher low, and that denotes an uptrend. So whether we bounce from here, like the green paths I've been showing you, immediately being bullish, or whether we need to chop lower, I think that actually sets up for, again, continuation on these altcoins because we built a nice base and it only becomes invalidated once we, one, lose this 50-week EMA, and two, lose this low. So the 50-week EMA would be your early signal. Now getting above this blue box will be good for bulls and could be an early sign that maybe we're actually going to see some nice short-term rallies in August, but that can look like this where you break out. And again, that can simply be a lower high if people start leveraging too much and we then double bottom or we sweep. But all in all, you form that higher low in that orange path, which sets up for those September and October rallies. So that's what I'm seeing when it comes to alts. Looks good. Daily bands not being respected, similar to Bitcoin. You're seeing the weekly bands now be respected. They have flipped bullish. So watch that 50-week EMA, watch those weekly bands. And as long as we're making higher lows, you can expect news highs, whether it's immediately or later on in the year. So that is everything when it comes to the charts. Let's check out the positioning. So what are we seeing when it comes to the order flow? Well, we got the Bitcoin chart up here. Switch to the 4-hour. So this is open interest. So this is all of the longs and shorts that have built up. So we broke down from this range here, which we're currently reclaiming. Open interest, however, did not break down. So that is interesting. That means longs and shorts did not close on this breakdown to 112K, which can mean one of two things. If price can reclaim this range, as we're doing now, and accept above it, well, all of this open interest puts the longs back on side. As I said, if we reclaim that value area, all of that buying and selling is now again at break even or in profit. So those longs are less incentivized to sell. And it puts those shorts under pressure, which leads to higher prices, a short squeeze in other words. So if we can accept back in this range, well then pressure's back on shorts because that means they should have taken profit at this 112 area. However, if we do fall back below, well, that puts the longs back under pressure from this range and can lead to further selling. So you really just want to see, does Bitcoin meet resistance at that value area low around 116.7? Or can we flip it? Can we accept above it, build back in this range and set a trap here? Well, that then puts the pressure back on the shorts in this build up here because we're not seeing it close out, which is actually interesting and can set up a big move either way. So definitely keep an eye on that. Might have set a trap here already, or we might need to flush longs later on in August. So we're seeing the funding rate. So this is really just your sentiment indicator for how bullish people are, because if it's extremely positive, that means traders are happy to take leverage positions. If it starts slipping negative and red, that means actually the spot market is leading. So traders aren't happy to take leverage positions. So neutral is 0.01. So we're actually below neutral, which is good to see. So everything is shaping up decently for Bitcoin here. Watch if we can accept back in that range. Now, this is the open interest for everything excluding Bitcoin, so your altcoins, and we actually saw something different. We saw a bit more of a breakdown. So the flush on this Bitcoin dump actually led to more pain in the altcoin market, which is generally good because generally it's retail who are long in altcoins and it's retail that need to get flushed out, whereas it's your smart money that are more so buying Bitcoin. They aren't using stupid risk. They don't need to be flushed out as hard as these altcoins do. Don't get me wrong, there's still leverage that builds up in Bitcoin, but it's not as retail focused as these altcoins. So it's actually a good time to see that altcoins reset their positioning. Funding rate flipped negative. So sentiment got really bad, as I said. When sentiment gets bad on a retest of a known support level like the all-time high, it's typically a very good signal, and that's why we're seeing this bounce today. So positioning is actually pretty decent. We've seen a flush. It's just yet to be seen whether we need to flush further or if we can start accepting again. So that is it for open interest and funding rate. Something else I want to show you guys. So there's this nice indicator here which shows the margin borrow rate, so the interest rate for borrowing USDT on Binance or Bybit. In other words, leverage. And what you can see is when this interest rate spikes high, that means the cost of borrowing capital is at a large premium. So it's 61% annualized in these periods. And what does that lead to? Well, that led to your top back in March 2024, and Bitcoin had to consolidate. Again, you had a spike here back in November 2024, where people were paying 17.8% on the annualized 48%, sorry, on the annualized interest rate. So super premium to borrow USDT, otherwise known as borrowing leverage. And again, that leads to the top here. So on Binance, we're not actually seeing much signs of leverage coming in, which is good. Let's check Bybit. Got to check all these exchanges to get a good overview of the leverage in the system. Wait for this to load. So when it comes to Bybit, again, you see these spikes around when Bitcoin tends to top. And we did have a recent spike, which led to the top at 120K, where it went as high as 32% annualized interest rate, but that has since cooled down and we're back to neutral levels of leverage. So pretty healthy when it comes to positioning. As I said, not much leverage. It has been flushed out. So it's all dependent now on whether Bitcoin can accept back in the range and put those accumulators back on side. So that's it when it comes to positioning. Now, catalysts and risks. Not much actually going on at the moment. It's pretty boring when it comes to events. We have got the 2025 FOMC probabilities, which I touched on. So these have been chopping up and down this week since the July FOMC. So it's been pretty crazy. So this is the September probability of an interest rate cut. It was chopping between 80% a day ago. Now it's 90% chance of people seeing an interest rate cut in September. But a week ago, it was just 60%. So before the FOMC, during the FOMC, you're seeing this wild change in traders' expectations of an interest rate cut. Now that typically leads to chop. That leads to everything I've been saying for these summer months and what I'm expecting in August, because it's indecision. You don't want to see rapid changes in this. Overall, it is good that traders are seeing a higher probability of an interest rate cut now. That came in after the week's jobs data. But when you're seeing the wild swings, that is swings of emotions, and oftenly price needs to then just digest a little bit. And it's the same story when we look at October. So traders are now only seeing a 3% chance of interest rates being the same in October. So 97% chance, they're pretty certain of an interest rate cut. And when we look at the final FOMC in December, it's more of the same. So a 99% chance that we see an interest rate cut. So keep an eye on those probabilities. There's going to be 2 rounds of inflation data coming in, loads of data till the next meeting in September. So it's quite a while away. So interesting to see. But overall, probably signals some chop in August, given that they're changing so wildly. But it is bullish that we are seeing traders price in to a higher degree that we're going to see cuts. Now, next up, something I touched on already. So the weekly market structure on Bitcoin is bullish, but when we retested 112K, sentiment flipped bearish, and that's very good to see, something I like to see. Other than that, there aren't really any catalysts out there, and it's very much the same story when it comes to risks. You just see this low volatility during the summer period. So you're getting this seasonality where you can expect summer chop and breakouts to not hold, as I've been saying for months now. And that's what we've got. We're filling in part of the breakout. So volatility, it's got super cheap. When you look at something like the VIX, so this is the volatility index of the stock market. As you can see, in these red zones, so this was during the April tariff panics, this is when the stock market crashed, when Bitcoin dumped to 74, the VIX was spiking. Volatility became expensive. But since then, volatility has got absolutely crushed. And that is bullish. When you see volatility going lower, making new lows in a downtrend, that's when you get your slow upwards grind higher in the stock market, which is good for risk assets, good for Bitcoin, where bad news gets bought up and you just generally have that slow grind higher, which makes it hard for traders to get on board because you don't get any decent pullbacks. But some traders, they go long and short based on volatility. That is their pure job. And eventually volatility, it gets super cheap, and then you can see some sort of spike or bounce in volatility. But overall, the high time frame trend is down, which is good and sets up for a bullish second half to the year, as I've been saying. But watch for any spikes. As you can see, you get a spike here, spike here. You've had a recent spike, which has led to this pullback, and that can lead to your pullbacks, your dips, which are a buy during the summer because the overall high time frame trend is down. Volatility is cheap, which is bullish for your risk assets. So that is it when it comes to August. Expect chop. It is summer. Watch out for your green path, your orange path, respectively. And overall, looks like we're setting up for a good September, October, November, and onwards. And it's yet to be seen. Join me in the next monthly outlook, and we'll be diving into all of that good stuff for September. Boom.